Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets on Tuesday, the 1st of June. Starting off with a chart which looks pretty solid indeed. Coral products. The reason for saying that is the as yet unfilled gap to the upside in December through resistance. And basically, if you bought in the aftermath of that, the next day under 10p, let's say, you'd be looking pretty, feeling pretty happy at the moment. But what the upside is currently is the way that we've got the shares just bouncing off the 50-day moving average at 13.5 pence, and the longer they stay above that, the greater the chance of a new leg to the upside and a target as high as 30 pence as soon as the end of next month. After the slow burn that we've had since the beginning of the year, one would expect the shares to start accelerating to the upside. Next stock is a welcome return to the Bulletin Board Heroes, a favourite of many, I'm sure. Pharaoh Alloy Resources. We've had, I suppose, 2 months of consolidation for the shares between 35 pence. End of day close above the initial May resistance of 38 pence today would be a great start, in the sense that obviously we just started at the beginning of June, so that would be a pretty strong piece of price action in its own right. And above the 50-day line at 35 pence, looking for a target here as high as 70 pence over the next 2-3 months, maybe as soon as the end of next month. So looking pretty strong there on Pharaoh Alloy, and backed by that latest MACD buy cross in that oscillator window as well. Moving along to a stock which is also on the front foot at the moment. Here we've got Image Scan, where we can see that the shares have smashed through recent previous August resistance there at 3.5 pence. They did that on the weekly close on Friday. And the view is that while we're above 3.5 pence, we're looking for at least 6 pence at the top of a rising trend channel from back in November 2019. And in fact, we could see much more than that, but looking for 6 pence as soon as the end of the month for Image Scan at the moment. Stock which had a bit of a sort of slowdown of late was i3 Energy, but bounced back nicely today in the wake of a rather detailed RNS from the company, and also gapping up higher as well. The initial May support was at 7.7 pence, so while we're above that, on an end-of-day close basis, looking for a return to May resistance at 10 pence plus. By the end of perhaps next month, the target here as high as 12 pence, which is the top of a broadening triangle from back in March. Upside here really valid while we hold above the 200-day line. That's there at 6.5 pence, and that seems to be pretty solid in terms of the technical position at the moment. On to Netscientific, which I did look at last week, but seems to be sort of gaining traction at the moment. The initial target here was 90 pence on an end-of-day close above 70 pence, which is what we got on Friday. It was the first end-of-day close, I suppose, that we had in this current move. I think there were no end-of-day closes over the last year above that level. So Friday managed to get things going, and we've got a decent acceleration today. As I said, initial target here 90 pence, which was the old target, and the target maybe as soon as at the end of this month now, up to £1 5 pence, which is that August resistance line projection from last year. At this stage, only really well below the 70 pence level on an end-of-day close basis, really delaying the upside scenario. But all the near-term moving averages rising, so that looks pretty healthy at the moment. News flow again from Pires Investments, and here we've got a nice bounce for the shares. I suppose they basically tried to test the 200-day line there at 8.9 pence as support, but shares just too strong to touch that line, and that tends to give a positive reaction. Also got bullish divergence there in the RSI window, so lower lows during May, but the RSI actually delivered higher lows, let's say, and also we've got an MACD buy cross for the shares as well. The view is that end of day close back above the old February low at 10.25 pence should be enough to give the shares enough momentum to initially take out 13.4 pence, which was last month's resistance, and then head back towards the 14 to 16 pence area, which was like the average of the trading range post-February before the decline in April. Big picture target with the shares, I suppose, over the next 2 to 3 months, up towards the top of the broadening triangle from back in January at 21 pence. So let's see if we can get that by the end of the summer. Next up, a stock which doesn't normally get airplay here just because it's so illiquid, but might be worth watching out on Sepehr. There's been a sort of bottoming out process over the last year and a half, which may be too long for most people to wait for, but supposed to be get a weekly close above 3 pence, and last month's intraday high, then the shares could be on their way for a turnaround. Maybe that's something to watch if you are keen on a slow and low liquidity situation. On to Sareum, which has been covered here several times, and here at the picture looking rather more sprightly than it has in quite a long time. The overall picture here is actually quite strong, with the turnaround that started in April last year, breaking 1 pence, and then I suppose the next achievement was to break above 2.5 pence over the last month or so. Gap higher today, and an end of day close or a weekly close this week above 3.1 pence should be enough to get the shares up towards at least 4 pence by the end of the month. If you're a fan of the shares and looking for sort of broader horizons, then I suppose the bigger picture target here, maybe in the next 2 to 3 months, would be up towards 5.5 pence, maybe as soon as the end of July, if we can clear this 3 to 3 pence zone relatively quickly. This stage only back below the gap, and 2.5 pence really delaying the upside scenario on Sareum. Next up, a stock which took ages to get off the ground and get underway, but looks as though we're finally moving with Tomco after the bear trap gap reversal that we had last month. The normal rule is that an end of day close back above the top of the gap is the trigger for a move. So the top of the gap there was at around the 0.48 level, and we had the end of day closes above that level from the early part of last week. Gap higher today, probably just all we need to see now is an end of day close back above last month's peak at 0.65, and that would then confirm the journey, or a possible journey, up towards the top of the rising trend channel from September on Tomco as high as 0.9 pence, and that could be seen as soon as the end of this month. Just a couple of stocks to go now. First one is Tullow, both of them oil stocks. Here we've had a nice break of that post-March triangle there at 53 pence and the 20-day moving average. An end-of-day close above 53 should be enough to give us a move towards the top of the rising trend channel from March, as high as 77 pence as soon as the end of next month. At this stage, only really well below the 50-day line, and the floor of the channel at 51 pence, really delaying the upside scenario. Interesting to see a few stones were thrown at UK oil and gas last week by the bears, clearly trying to prevent the stock going up, but it's gone up anyway, so that's good news for fans of the stock. Here we've had a break of a resistance line there from April at around the 0.18 pence level, and the longer we stay above that, the greater the chance of retest of the 0.3 to 0.35 resistance from back in April. An end-of-day close today above 0.25 would really be a positive. But as long as we remain above the 50-day line, which is rising at 0.21 pence, one would say that UK oil and gas is back on a more positive and bullish trajectory, especially after having had a bear trap from below the 200-day line last week. So looks like a better picture there for UCOG. That's it for me today. More updates tomorrow.